Welcome, everybody. Joe here. Hope you're doing well. Are the markets edging us? Are we falling victim to inflation? What's happening with the Bitcoin price? I know that's what I want to know. But yeah, welcome. Afternoon space, trying out different times to make it convenient for the audience. Today is August 20th, Tuesday. Summer's almost over, and that's a catastrophe for me because I'm a teacher and I don't want to go back to work just yet. But man, oh man, we got some good topics lined up today. We got some great topics. Actually, we're going to talk about inflation and why Kamala Harris's plans are not going to solve inflation. In fact, they're just completely misguided, in my opinion. We'll get to the facts and then my commentary on that. We'll talk about Bitcoin as a hedge, what the inflation might mean for crypto prices going forward. We're going to worry about your bags and mine today. We'll talk about some nice airdrop farming in Cosmos. We'll talk about some nice airdrop farming on some Ethereum layer 2s as well. But welcome. Your questions and comments are especially welcome. And that's why I have the wonderful chat that's live. Anything you want to know, anything you want to ask, any topic that you want to bring up, feel free to drop it there. If you're watching this on Twitter, you can come over to YouTube, but I believe I can still see your comments in the chat on either Twitch, on Twitter, or like I said, on YouTube, which is where I hope you are right now. I just recently started a Rumble account. I'm going to put some content over there. If you're a Rumble user or if you like Rumble as a crypto content platform, maybe I'll work on that. And of course, Omniflix, where I will be sharing some stuff this week, some exclusive content for Cosmos people. All right, so where do we begin? I guess we start at the beginning. But if you've never seen me before, my name is Joe for Dead Cat Media, producing crypto and Web3 content for you, the end user. That means customers, early adopters, retail traders, token holders. Sometimes that even means LPers, the ones taking on all the risk for this wonderful blockchain technology that we are experiencing here. But make no mistake about it, we'll talk about tokens quite a bit. Sometimes we speculate. We'll talk from Bitcoins to shitcoins. It doesn't matter. This channel, we talk about anything that interests me and interests you. But this is not a channel for pumping prices, but really examining the real value, especially the long-term value and use cases of crypto while we avoid all the scams and rug pulls that crushed us in 2022 and 2023. But my company, Dead Cat Media, is dedicated to using all the platforms I named before, starting with YouTube and extending on to Twitter, Rumble, Omniflix, and Twitch, to pass on informational and, of course, entertaining content to you, the audience, because I'm worried about our bags. I'm very worried about our bags because in the end, the price is all that really matters to us. That's why we're chasing tokens. That's why we're worried about tokens. And that's what we cover here. You can support me by subscribing, dropping your comments and questions down below, and in the description, you could join my Telegram, which gives you more insights into what I do and also ways to win money by supporting me. Got a madman in the audience. Happy to have you. It's the first time in a while I've seen you joining the stream. I've been changing the day, changing the time, trying to make it convenient. But I think next month I'm going to settle on Sunday mornings because I wake up early and I'm usually actually in a good mood in the morning. It'll be before football, and I'll get everything out that I need to get out on Sunday, and then can revisit it all throughout the week. But welcome. Happy to have you. And when I say welcome, I actually mean it. I mean, it's not easy to digest all this crypto content. I know that. Believe me, I know that. And we're going to talk about inflation. We're going to lead with inflation first, I think. I think that's what we'll do. And we are going to take a break today. I need to plan in some commercials so I could get a breather, go to the bathroom, all that. All right. So, man, where do we start with inflation? I did put out a video today just giving some general information about inflation, and the government and corporate world has convinced us that inflation is the rise in prices. Kind of. Inflation is more about the expansion of the money supply, which can cause a rise in prices, which is what we, the consumers, actually feel when we go to the store or ordering our crap on DoorDash and Amazon. But prices going up doesn't mean that there's inflation in the economy, right? Prices can go up just for simple supply and demand dynamics, right? So, man, it's a hot topic in the current political landscape. It's going to be a deciding factor on how a lot of people vote, and their interpretation of what inflation is and how it's affecting them will probably dictate a lot of votes. I think there will be some single issue voters that decide inflation is the key issue of the day, and they might vote for a candidate who they hate because they happen to agree with their stance on inflation. And now that's where Kamala Harris comes in. Let's get that up here. Here's Kamala Harris. Here's Kamala Harris. But she obviously was the VP. She's been in the Senate. She comes from has a law background, and man, she's all of a sudden rolled out her her economic positions in a flurry the last couple of days, couple of weeks. And one of those positions was $25,000 assistance for first-time home buyers. Well, I'm sure Kamala Harris knows this, but that's just going to raise prices of houses about $25,000 on average for first-time home buyers. Because why? Because the realtors are just going to price the houses higher, knowing that now more people will be shopping for houses, right? So it may sound good to a first-time home buyer, and there will be people who take advantage of this $25,000 and they are able to buy a home for the first time. That's great. But man, governments giving away money for free is going to be the theme for this election, and it's going to go both ways. And we'll talk about what I think about the candidates at the end, but I do want to get through the facts first. And the fact is that she did roll out this idea along with this anti-price gouging plan to punish, I guess, stores, gas stations for raising prices too much. Interesting. I got some interesting tweets here that we're going to run through, and let me switch it up. I'll make this big enough so that we can read it. How do I get this on the screen? Let's roll this out here. Annoying. Maybe this is better. All right, so it's the best I can get it on the screen. It says, remember, back in 2020, the media genuinely tried to tell us that the unprecedented money printing wouldn't cause inflation. Remember, I said inflation is related to the expansion of the money supply, money printing, although money is not actually really printed. It's just numbers on a screen that get deposited into various accounts. He says, the media also said this might cause deflation. Well, I wish I were making that up. I wish I wasn't reading this right now, because I remember when they were talking about deflation, but also talking about if there was inflation, don't worry, it's transitory. And they made that word up, right? Transitory, they meant temporary. It's temporary. It ain't temporary. It's been going on for as long as I've been alive. And then we have the CPI report, which the government rolls out every now and again. And this is one of the reasons why people are convinced that inflation is the increase in prices. They use this index to figure out how to measure the actual effects of inflation, let's say. And it's a basket of non volatile consumer products that people tend to buy often, right? It's energy, housing, food, all kinds of things. The problem is that this basket changes all the time. And a lot of times, what seems to be happening is that if something favors a current narrative of quote unquote low inflation, they'll include it in the basket, or maybe they'll weight it differently. And then they'll take something else out that's maybe skewing the numbers a little bit. But this number is important. I'm not going to downplay this number, because this a lot of times dictates monetary policy. And I think it has a lot to do with whether or not we're going to see lowering of interest rates in September and going forward, leading into the election and shortly after the election. Here's a nice visual, and it says overall inflation fell below 3% for the first time since 2021. So this is showing inflation. You have core inflation, overall inflation, reaching as high as 9% around this time last year. And now look, it's going down so much. Everyone, the president's doing a great job, right? Because the inflation is down so much, down to 3% or just below 3%. So what does this actually mean for rates? Well, depending on how you interpret this, and we'll see some headlines, that if the Fed lowers rates, that might mean that they have inflation under control. If Fed raises rates, that might mean that they don't have inflation under control, right? Lowering rates is generally good because it causes asset bubbles, and we're in crypto. We want there to be a run up in crypto prices. I want there to be a run up in equities because I'm invested in the stock market. I don't only have crypto, and I hope you are not only sitting in a single asset class. If you only have crypto and no other assets, you might be in trouble, right? But if it turns out that something like Bitcoin is the greatest inflation hedge ever, maybe you're smart. However, this chart would dictate that you maybe should have punted some of your Bitcoin back in June of 2022. And I said this time last year, but it was 2 years ago where inflation did peak according to this. All right. Now here's something else that goes into whether or not the Fed will raise or lower interest rates is the labor statistics. And it says here from Zero Hedge on Wednesday, the Bureau of Labor Statistics will downward revise jobs. And they've been doing this for the last 4 or 5 years, right? They always put out these optimistic numbers. Then a couple of months later, when everyone forgets, they revise them in the downward direction, because it turns out that's not the real statistics. They were overly optimistic. What's concerning here for me is this means that all beats recorded in the past year will have been misses, and the US job market is in far worse shape than the admin would admit. Look, unemployment is not a good measure of the labor market. It is not. Labor force participation rate, which has been making low after low after low since 2007, 2008, even while Trump was president. Labor force participation shows how many people are actually working. And that number has just been hitting all-time lows since 2007. That means that's less people with full-time jobs, less people paying taxes. And if that number's low, that means that there's more people not working, not paying taxes, but of course, most likely getting some kind of federal benefit like unemployment or something like that, right? This is really bad. It throws the economy out of whack. And because there's really a lot of subsidies for unemployed people, a lot of benefits, a lot of aid, there might be people who are in perfectly fit condition that could be working full time, maybe even 2 jobs, and they're just not, because man, they get all these benefits that keep them home, keep them on the couch. And I've seen this firsthand. I work in New York City, and I've worked in neighborhoods where this is more often the case than the exception to the rule. Here's a summary of Kamala's statements as it relates to her economic policy agenda. This is from Pop Crave. I haven't vetted this. I'm taking this at face value. The wording might not be the exact wording that she uses in her policy rollout, but this is a summary just to get the gist of what is happening here. So, number one, eliminating medical debt for millions of Americans. A lot of people are in deep medical debt. So I get that this is a just as much of a emotional issue for people as it is an economic issue for others. All right. Number two, banning grocery and food price gouging. Number three, capping prescription drug costs. So more price fixing, right? And then number four, providing a $25,000 subsidy for first-time homebuyers. We just mentioned this. Offering a $6,000 child tax credit per child for the first year of life. We'll come back to this. But this is, in summary, what she has either committed to or hinted at that will be part of her policy agenda. It involves basically government stimulus and price fixing at the retail level, if you will. And this is to combat the effects of inflation. And I said before, I don't think we could look at inflation as strictly the cost of items that we like to buy, and that like the cost of items that we wish were cheaper. Got some spam in the chat. Got to block somebody. Sorry, guys. Some spam in the chat. Don't click on that link if you saw that. But let's look at the actual big picture with inflation, and that's the money supply. Money supply is, here in this case, it's M1. M1 is basically the liquid money, the money that could be used, I guess, immediately to buy things and deployed towards things in the economy, right? So let me refer to my notes so I get it right. I don't want to confuse M1 and M2. They are similar, but there's some differences there. So the significance of the M1 money supply is that it's readily available for spending, reflecting the immediate money supply. And then we have M2, which I'll show you on the next tab. And this is like a broader view of the money supply. This is money that could be converted into M1, but not immediately available for spending. Sometimes M2 is used for future inflationary pressures. But here's M1. You could see after 2020, boom, we have a quadrupling of the money supply. Quadrupling of the money supply. And prices were going up around then. The thing is, and let me show you M2. M2 shows more of a steady rise. They go from the same time period, the 1960s, and M2 gives a small bump, 2020, but that's because it's been steadily rising really since, the 1970s. Well, let's look at M1. And, you could say I'm cherry picking this, but I'm looking at this for a reason. Not only did the money supply drastically increase in 2020, we had lockdowns and we had supply chain shut down, which limited the availability of lots of goods in the grocery stores, of gas, of cars, of housing. So simple supply and demand is what should dictate prices at the cash register that you pay. I know there are other things involved as well. There's taxes and there's Black Friday. There's all sorts of things that temporarily manipulate this, but overall, in general, on average, supply demand should dictate the average price that you pay at the cash register. And we had supply shortages, right, of goods. People, fighting over toilet paper and cans of beans and all that crap. At the same time, supply of money increases. People got stimulus checks. People got paid to not work. I got paid to not work. People have more disposable income, and you have more money available to pay for less goods. This drives prices up. This doesn't necessarily mean the stores are making more money, by the way. Prices could go up and stores could be losing money. And again, here's M2. And you see a small tick here, but it is in relation to decades of steady increase in money supply. So what am I saying? What I'm saying is these policies that are being promised here, in this case by Kamala Harris, and I'm sure that these would be the policies of any Democrat candidate running for office, right? Their core base are people who eat these government programs up. They love the free stuff, the free college tuition, in this case, free medical debt. And I don't know why anyone's in medical debt when Obamacare basically became the law of the land and you are forced to have medical coverage. You're forced to. I mean, I have to fill out something when I file for taxes. If I'm not covered even for 1 month, or anyone in my family is not covered, I'm supposed to pay a fine. So I don't understand how people are in medical debt after Obamacare. But when you're engaging in this price gouging price controls, whether it's prescription drugs or food, there will be shortages because stores will just simply stop carrying products or stop ordering products that they lose money on. This will direct more buying into other products, which means more people will be buying more of things that they wouldn't, because that's just what happens to be profitable for the stores. And then those are going to be out of stock. You're going to have empty supermarkets sometimes if this were to actually go through. Couple that with subsidies and stimulus, people have more money to spend. What's the point of giving people more money to spend by either eliminating their debt or just giving them checks for having kids, for buying houses, or for sitting home like we were given during COVID? If you're going to just control prices on the other end, it would seem that one of those parts of the equation is just simply not necessary, right? So, like I said, voters eat this up. This is going to be a single issue for lots of people. Some people who hated Biden, don't like Kamala Harris, will vote for them because they like this because inflation's their number one issue. And of course, there's tons of market research that goes into making these promises. Otherwise, they wouldn't make them part of the policy agenda. And that's just how politics is. What do we got here? Peter Schiff. Peter Schiff, if you don't know who Peter Schiff is, he's all about buying gold as a hedge against inflation, hates Bitcoin, hates the recent economic monetary policies of our government and central banks. And he's basically saying that a lot of the economic data is people working second or third jobs because inflation has destroyed the buying power of their money. Anthony Pompliano here. A single bar of gold is now worth $1 million. Right? Gold is at or near all-time highs in price, and that's priced in dollars. That's why gold is typically seen as an inflation hedge, right? When the purchasing power, the value of dollars goes down, the value of gold and other commodities should go up. Great account that I've been following for a while. It actually helps me make content. This is a profound statement here. Your stocks aren't getting more valuable. Your currency is becoming less valuable, and the stock market is absorbing the monetary premium. If everything in the economy is going up, 10% per year, your stocks and investments have to make way more than that for them to be actual viable investments. Not only when you sell stocks do you pay capital gains tax. Now you have to cover inflation. Otherwise, you may have lost money even though your stocks have gone up. Here's Gemini, the crypto exchange, talking about the CPI under 3%, right? The consumer price index increased just 2.9% year over year in July, giving the Federal Reserve ample reason to cut the federal funds rate at their next meeting. Meaning, if inflation's under control, they can lower interest rates to stimulate the economy by putting more money into circulation via loans. Putting a lot of money into circulation is what causes these these skewed prices over time, this inflation over time, right? So it seems like we're kind of chasing our tail, but obviously, Gemini, you're a crypto exchange. You make money when people trade crypto. You want there to be more spending money in the economy. And I won't read all this, but it's basically showing how the profits of a lot of grocery store chains have actually remained flat, even though prices have gone up. And it says it's amazing that actually, with so much instability, the retailers have managed to maintain margins. So even though the prices are going up, the margins have stayed constant because the cost of doing business is going up, right? When a store sells something for $10, and let's talk about this seriously before people get upset. If a store sells something for $10 and they have a 10% margin, so they're making $1 for everything they sell for $1. That means their cost basis, their cost of doing business is $9 for every $10 of product they sell. If you go into the store, now that product is being sold for $11. It doesn't mean now the store is making double off of that product. Their costs may have gone up. It may now cost them $10 to sell that item for 11. Their margin's no longer 10%, their margin's 9%. What if their taxes go up? What if the minimum wage goes up? What if a new tax hits something that they sell? What if there's a new tax on something that they need just to run the store, right? Not related to the product, but like an ancillary cost to doing business. The prices you see at the store is not what the store is making. The margin on food is 1% to 2%. That's a very fragile margin, and it's not uniform across the board for every product in the store. I used to run stores. I used to sell produce. I used to sell um, um, drinks, um, protein bars, snacks, things like that in my store. And sometimes I have to raise the price 10, 15, 20% from the previous week. And it's not because I was greedy and trying to make more money. It was because my costs have gone up. So in order to justify me keeping that product on the shelf, taking up shelf space where I could be selling something else, I have to raise the price. The problem is I know when I raise the price, I'm going to sell less product. So it's not only the margin percent that matters, it's the total dollars at the end of the day that I'm making as a store owner um, for that particular product on that particular shelf in that particular location of my store. I need to move product at a specific velocity to make money as a store, even if I have a good margin on that item. And that's all I'm going to say about inflation. I'm going to take a break. We're going to come back. We'll talk about Bitcoin and crypto because that's a lot more fun than talking about these government policies that claim to rectify inflation, but also seem to cause inflation and expensive prices at the same time. We'll take care of that in editing. Geez, sorry, I didn't put my mic back on. It was supposed to automatically go back on. But yeah, let's talk about airdrops. We'll go back to the other graphic in a second. This is drop. And I said, I'm back in the business of chasing airdrops, I think, because some of them are a little bit easier than others. Look, I'm not joining Discord. I'm not going on a test net to play around with fake money. I'm not going to wait 6 months to see what airdrop I might get. I want to do something that's easy that will get me some kind of airdrop and on a chain in an ecosystem that's actually good. And this is on Neutron. If you guys know anything about me, you'll know that I am not bullish on most of the Cosmos chains. I like Atom long-term because I think eventually they'll figure out the Atom economic zone, and settled nicely in that Atom economic zone is Neutron. And as long as the Cosmos hub stops funding their competitors like idiots, I think Neutron is going to be just the DeFi hub, the application hub for all of Cosmos. And then I think we'll have some nice little app chains like Stargaze, like Omniflix, like Jackal, like Akash around, right? It's part of the solar system. But for me, Neutron is core Cosmos DeFi. And Drop is a liquid staking protocol backed by Lido. And they have a really easy way to earn an airdrop by actually doing meaningful participation in the protocol. So I have a referral code. I would appreciate it if you're going to do this, use my referral code. It's in my Telegram. I'm going to put it on Twitter right after this. What do you have to do? You basically have to use the protocol. That's it. You take some Atom, some liquid Atom. If you don't have liquid Atom, use Stride to get liquid staked Atom and then swap it back into Atom. Very easy. You go to this app.drop.money and you liquid stake. It looks like a DEX. It says you have Atom. Do you want D Atom? That's the liquid stake version. You get it. Every day you hold that, you're qualifying for an airdrop each day. Now, what I did was I went for the 50x multiplier. I only swapped half my Atom into the liquid staking derivative, and I kept I swapped the other half into USDC on Astroport, which is also on Neutron. Now I have 50% D Atom and 50% USDC. I went to Astroport. I searched for the pool. I supplied liquidity, 50x multiplier for the points. The points are called droplets. And that's it. That's it. I'm getting 50x multiplier compared to just holding that auto compounding staking derivative idle. And I'm supplying liquidity to Astroport, which is good for Neutron. Every day I hold it there, I'm getting credit in the form of droplets. That's like the points that you build up. And then at the end, they're going to do an airdrop based on, I guess, who earned what using the multipliers for this airdrop campaign. Someone's asking why Neutron. I like Neutron because it's not an app chain. It's going to be a DeFi hub. It's backed by Lido. It's very close to the Cosmos hub. The token is unnecessary. It uses Atom as gas. They have lending. They have applications that are actually going to use LP tokens, which I've been railing about for like 2 years now. All these LP positions all over the ecosystem, you have to be able to do something with the LP tokens. Otherwise, what's the point? You're suffering impermanent loss for no reason, right? So I like Neutron because I think the team is smart. I'm trying to get some regular work and sponsorship with them. I think that's going to be the place the next 3, 4, 5 years for Cosmos. Yes, they just showed up to the party. They're backed by Lido. I like that. And I like that they don't run their own chain. It's not that expensive to run a consumer chain compared to running your own chain. Speaking of airdrops, this is Ethereum Daily. They have a nice little guide for Scroll, which is an L2. You can bridge over there. I'm probably going to make a video this week. Maybe tonight I'll make the video. I do want to farm some airdrops as long as they're not too labor intensive and I know what I'm going to get for it. I think the L2s, specifically Base, are worth looking at rather than getting tied up in one ecosystem. This is a beautiful Twitter where you could stay on top of all the different L2s by following one account. It's one of the only 3 accounts where I set my notifications, and there you go. There you go. Nice little airdrop hunting guide. You take your chances like the rest of us, but at least it's plain and simple. No joining Discords, no making 100 fake accounts so you could farm the airdrop, and that's it. Nice and transparent. All right. Let's look at prices, then we'll talk about Bitcoin, and then we'll get out of here. How's that sound? All right. So I usually look at 7-day price trends. I do not trade minute to minute, although if you're a trader, maybe you're trading on 5-minute candles. Good for you. That's not what I do. The people that watch this channel, that's not what they're coming here for. I like to look at the 7-day trends. Aave. Listen, I've been outspoken against DeFi tokens, but I think we now have to look at the really good DeFi protocols and look at their tokens and say, are they a play? Is Aave a play? Is Uni a play? Is Radium token a play? I think it has to do with how much of the token's actually in circulating supply. I don't want to see a token where only 30% of it is in the circulating supply. I know that I'm just asking to get dumped on and there are unlocks coming. But Aave, 28%, this is not a micro cap, 28% in a week. Man, maybe it's time to get that on the radar. Tron is the number 2 DeFi ecosystem in all of crypto, and that's all I'm going to say about that. We talked about Tron a couple times. A couple weeks ago, I said, put this on your radar. I didn't do it yet. Hopefully you did, and you're now seeing what's happening on Tron. BitTorrent, 14%. Thorchain, 9%. I like this. I'm in on Thorchain. I'm interviewing a co-founder tonight, and there'll be content out hopefully in the next week or 2 from my channel about Rune Token and Thorchain. Let's look at the losers. Celestia, good Lord. I bought Celestia at like $9. I sold it like around 8. It continues to fall. Celestia is a super volatile token. We've got Mantra, down 12%. Ondo, down 12.1. Is Ondo a DPIN token? I want to see this for myself here. Where's the info? This is so much easier to use on the phone. I think it's a RWA or maybe a RWA or a, oh no, it's just another DeFi token. I thought it was an RWA or a DPIN token. But yeah, those are your 3 losers. I'm involved in a lot of microcap tokens that are not going to show up on this list. I like Jackal. It's under 20 million market cap. I like Astrovault. It's under 2 million market cap. I gamble with some low cap tokens. Maybe we'll do a special on the low cap gems in the next couple of weeks. That would be fun. But let's talk about Bitcoin, the king, the undefeated, still champ. Let's talk about it. Bernie, nice to see you in the chat, by the way. We're going to talk. I would like for you to do some art for me for NFT Nashville. Hope that's okay. I'm going to just put some work on your plate. Let's talk about Bitcoin. Let's talk about Bitcoin and then we get out of here. Not that. That. All right. I wanted to finish this inflation talk off with a little talk about Bitcoin and what is it for the average person, maybe the newcomer who's like, I heard about Bitcoin, I know it's money or it's used as money, but really, what is it? This whole stream was about inflation, right? The TLDR on inflation is whether you think the government causes it or the banks cause it or it just happens because prices change. What we do know is inflation, it eats away at the value of your money, your fiat dollars, your US dollars, your euros, whatever. And this makes things pricier over time. If your money is worth less, the thing you're trying to buy will require more of your dollars to purchase. How do you protect yourself? Well, traditionally, wealthy people, smart investors, they hold assets that keep up with the rising costs, right? In general, gold, real estate, and just any inflation protected securities, they can help shield your wealth. And now in this futuristic Web3 world, we have Bitcoin. And I think every investor should understand Bitcoin, even if you don't ever touch it. Okay. But basically, Bitcoin was created by Satoshi Nakamoto. He introduced this white paper that called for a decentralized, peer-to-peer digital currency that eliminates the middleman in that exists in traditional finance, namely the banks. This would allow for direct transactions between me and you. Some of the key characteristics of Bitcoin. Number one, it's proof of work. That means it's extremely secure, being that it costs money for these network participants to unlock or release new tokens into circulation. And there is a schedule that dictates how many new tokens can be released over a certain amount of time, blocks, block by block, right? It's like kind of every couple of minutes, a block is produced and some Bitcoin gets unlocked. There's an inflation schedule for Bitcoin. Every 4 years, the inflation goes down. It's non-inflationary, which means, or disinflationary. It's anti-inflationary compared to dollars. And the reason why this costs money to run the network and release Bitcoin is because miners, they call them miners, they run these computer systems that solve computational puzzles that result in a super secure fraud prevention system that we call the Bitcoin network, right? It's like the source of truth, protected by how expensive and difficult it is to include transactions or change transactions that are in a block, right? That's why they call it blockchain. Besides having decreasing inflation every 4 years, Bitcoin has a fixed supply of 21 million coins. This creates kind of a digital scarcity, and this built-in limit guards against further inflation. It preserves value over time, and this might make Bitcoin a great hedge against inflation. Transparency is the other feature of Bitcoin that we have to keep in mind. It's a public ledger, right? Blockchains are basically just ledgers. They're ways to account for transactions, and Bitcoin tracks all the transactions on the network. Every transaction is visible to everyone, reducing the risk of corruption. And then finally, Bitcoin's trustless. It's borderless. You don't need to rely on banks or third parties to direct your transactions or manage your transactions in any way. Bitcoin relies on cryptography and consensus. It removes the need to trust a centralized authority. Remember, centralized authorities can remove money from your account anytime they want. They can reverse your transactions anytime they want, and they don't need to answer to you. So Bitcoin, building this trustless system, it's peer-to-peer. You eliminate that source of risk in the network. But is Bitcoin a great hedge against inflation? Well, so far it's been increasing, depending on the time frames you look at. Bitcoin's price has been increasing. Is it because it's an anti-inflation cryptocurrency? Well, compared to proof of stake tokens, which are highly inflationary, at least at the onset, Bitcoin has proven to be a great store of value within crypto itself. Bitcoin has outperformed, just about every token that's out there. But can this be considered an institutional grade investment given its volatility? It is volatile by traditional standards. Will Bitcoin become a reliable hedge against inflation when these fiat currencies fluctuate against the goods they're used to purchase, namely real estate, commodities, consumer goods? And then how viable is the network, given that it is expensive to run? How viable is Bitcoin as a global payment network in a rapidly digitized world, I should say. Is transparency always a good thing? Is the fixed supply a good thing? Is the fact that it's proof of work a good thing? We'll have to see. But like I said, every investor should understand Bitcoin. Even if you never plan to spend a penny on it in your life, it will be there. There are ETFs. You could self-custody. You could buy it with a custodian like Coinbase. My suggestion would be to learn about it, learn about inflation, the causes, the effects, and how you can protect yourself from the loss of purchasing power of the dollars that you use to buy food and gas and subscriptions on Pornhub, whatever you do with your money. I want to thank everybody in the chat. It's always good when you guys show up. I really appreciate the other content creators who support me, especially appreciate my sponsor, Shade Protocol, who makes this stream possible. And I will be attending a Shade Protocol space tomorrow. That's Wednesday, the 21st. We'll have some fun. It's at lunchtime, Eastern time, lunchtime American time, I should say. And we will see you there. Everybody in the chat, Bernie Tank, 5 on it. Madman, Jose Xavier, thanks for joining. See everyone